Hey guys, welcome back to the channel. In today's video, I'm going to be providing my outlook on where I believe we stand within the crypto market cycle, and I'm going to be doing this through the lens of the 10-month moving average. If you guys enjoyed the content, please do consider leaving a like and subscribing. So the 10-month moving average is a really great indicator to use, especially when looking here at the longer term market cycles for Bitcoin, and it can be very telling at what stage of the market cycle we're in. If I zoom out here just to get a look at all of the market cycles for Bitcoin, I think it becomes pretty clear here that we are quite early into the market cycle and that we do have a lot of opportunity ahead of us. So what's happened over the last few months with the 10-month moving average specifically is that we have seen the monthly candles come back and close above the moving average. In fact, we have both February and March's monthly candles closing above the moving average, and now we're even seeing the inflection point where the moving average is no longer sloping downwards month over month, but now it's got a little bit of an upward slope just over the last month. And this is one of the biggest signs that we are quite early in this market cycle. If I zoom out here just to get a look at the previous market cycles, we can see that this has happened exactly 3 other times. The first time being in the 2012-2013 cycle. I think you can pay a little bit less attention to this because frankly, Bitcoin was just a little too early for us to really use some of these indicators. But nonetheless, you can see multiple monthly candles below the moving average. And then eventually when the price came back above and the moving average started to slope back upwards, that really marked the beginning of a new bull run and the beginning of a new cycle. And then looking here at 2015, I think this is a great example of what we can look to and what we can expect from this market cycle. We had the price below the moving average for a very long period of time, over 1 year here, trending down month over month, and then eventually we saw that inflection point. We saw the prices coming back, closing above the moving average, and then we had the moving average starting to slope back upwards. Same thing right here in 2018 and 2019. We had the price below it for a very significant period of time, about 12 months, just below the moving average. The price started to come back above it, a few closes above it, and then it started to slope back upwards. It did sort of level off here in 2020, early 2020, but don't really consider this the same as the previous 2 bear markets because the price didn't spend multiple candles below the moving average. The moving average was not averaging down for a sustainable period of time. Again, you can see back here in 2015, it was averaging down for months and months and months. Same thing right here in 2018. So you really can't look at this brief period where we had just 1 or 2 monthly candles closing under the moving average as the same thing because it's really not the longer term bear market momentum that we experienced back in those previous cycles. So fast forward to today, again, we have seen the monthly candles start to come back, close above the moving average for the first time since the breakdown that we had in December of 2021. If I take a measurement here, you can see the price spent about 15 months under the moving average, so much more comparable to 2018 and 2014 and 2015 in the fact that the momentum was very consistently to the downside. The trend was very consistently to the downside. And then we just have this big rally taking us off the bear market lows, reversing that trend, reversing the momentum. And again, beginning what I believe to be the new cycle, the new bull run, whether that is to be an aggressive bull run like we saw right here in 2016 and 2017, or a little bit less of a parabolic move like we had in 2020 and 2021, that's ultimately up for debate. And that's really none of our concern at the moment. What we should be worried about is the path forward into, say, the next 6 to 12 months. And ultimately, the goal for the next 6 to 12 months is just to have the moving average really start to gain some momentum and then slope back upwards. So if I were to take a trend line here and extend this out, what we want to see with the moving average is pretty much the same thing that we saw from back here in 2020 and then 2016, is just having the price average up higher, give the moving average some momentum. It acted as support, you can see, throughout the bull run. The price really never came back below it in 2017. In 2020, pretty similar situation apart from this Black Swan event that we had in March of 2020. So if we can just get into the next 6 to 12 months, the moving average to really have a true inflection point. At the moment, it is just one increase month over month, but if we can have multiple months of averaging up higher, that's when I start to see the bull market momentum really pick up, and that's when I start to believe that we're into the later portion of the cycle where we can expect the great appreciation to new all-time highs. If the price is actually in the next few months, 6 to 12 months for example, coming back, breaking below the moving average, and then we start to see it slope back downwards, this is where we can look to this cycle and say it is nothing like the previous 2. And that would be a very bearish cycle because we would have a breakdown so early on. And if this were to happen, again, that's not necessarily something that we have seen before with Bitcoin. Anytime the price has broken below the moving average, it was leading to a new bear market. So you can see right here in 2018, price starting to break down, bear market decline. Same thing right here in 2022, price starting to break down, and then the bear market. So if we have the breakdown early on in this cycle and multiple candle closes under that, that's when I get concerned, and that's when I get worried that we might have a more bearish cycle this time around. But as long as the price and the closes are holding above the moving average and we can have that starting to slope back upwards, I really think we can expect an eventual trend towards the 40 to 50K region and then potentially all-time highs. And if we get a breakout similar to the previous cycles, that's all the better. I hope you guys did enjoy the content and the analysis, and as always, I'll see you in the next one.